This guys, my bad, guys. Shit, my bad. Let's keep going with this now. Yeah, so basically with liquidity is it doesn't have to look like equal lows or equal highs. Like something like this is considered liquidity because we know that in a zone perspective, there's equal highs above it. It's not equal, but we know that there's liquidity resting above. I'll go over that just now. But yeah. So and then so at this point I said that okay, if I know that gold has to come back towards this 12H level, and secondly there's a ton of imbalance right here. Remember, you have to keep in mind of imbalance. That means that gold is attracted to this. Imbalance isn't something where we're selling or buying at. It's just something to tell us that it's like liquidity, right? When we see a big move towards the downside, it always gets filled. More or less, it always gets filled. Quick example right here. We see this big move towards the downside, and then you can see that the price comes back up to fill it. And then once again, right here, we have another big move towards the upside, and then the price comes back down to fill it. So imbalance gets filled. It's never something where you want to buy at the 50%. That's wrong. But anyways, at this point I said to myself, okay, let me go down to the smaller time frames like the 1 hour, and let me analyze trend now. Let me look at the trend direction. Now, like I said, after price taps into an institutional candle, usually you want to see structure shift, meaning change. So if the structure is going towards the bullish upside, in this case it is, and we are looking to to sell somewhere like over here, then what we would want to see is that bearish structure forms. But after we price tapped into this institutional candle, we didn't see any bearish structure. And let me break this down to you quick time. So we have this low, and then we have this high. We have a higher low and then a higher high. Now in order for us to be fully bearish, we need to break past this micro slash macro higher low, because trend is still moving towards the upside. I'm just mapping down the swing point highs and swing point lows. High, low, higher high. Now we didn't break past this, so that told me, that was enough confirmation to tell me that yes, we are still moving bullish. So at this point I think price action was just over, quickly move this, price action was just over here, and I was looking at this little liquidity grab right here. So I saw that there's a ton of liquidity resting here. Obviously it's not the cleanest, but it's pretty obvious that there's equal lows resting below here, and there's a ton of stop losses. So what I knew is that price is obviously gonna have to make a run below here to take the money. Now at this point it could either do two things. It could take the liquidity and sell off, and that's when we could look for more sell opportunities, or it could take the liquidity and reverse. And evidently that's what ended up happening. We took the liquidity and reversed. So just off of that information, I said this in my course millions of times, this specific setup right here, I said this multiple times. If the market takes liquidity and ends up reversing right away, that's a good sign that the market is going to continue with the directional trend. So if the trend was towards the the downside, let me find inverted scale quick time. I swear, where's inverted? Yeah, right here. If it was towards the downside, like right over here, we see that there's liquidity. The market shoots above it, takes the liquidity, most likely it's gonna continue going down. So keep that in mind, make notes on that, rewatch the course if you don't remember that. And yeah, so then at this point I think price was like right over, no, it wasn't there, it was right over here, perfect, right here. At this point I said, okay, this move down, grab liquidity. I already know the market's making a new highs, potentially up to here, so I know the market's gonna go up. This move, grab liquidity. An institutional candle that forms, an institutional candle that's formed in the way of grabbing liquidity is 100 times more stronger than any other random institutional candle. Let me show you what I mean by that. When we see price action is moving, bullish or whatever, and then we see liquidity, we see equal highs get created. As soon as we see this happen, we see that the market pushes up, takes out liquidity, and then sells off, and there's an institutional candle inside of that liquidity grab. That IC candle or order block, whatever you want to call it, increase in probability by like 1,000,000%. That's my own thing that I believe, but it works. Trust me, it works, and I'll show you guys right now. So let me go back to my normal gold chart so I can make this clean as possible. And yeah, so we can see that there's more liquidity here. Before gold swept liquidity here, we saw that there's more liquidity being generated. After we before this move, we created more liquidity, which is a big sign. So at this point, I said, okay, this move down swept liquidity over here. It went up. Let me go down to the 15-minute. On the 15-minute, we broke structure. We saw this little, downtrend forming, lower lows, lower highs, and then boom, we break structure. At this point, I'm like, okay, micro is bullish as well. It's time to look for buys. No matter what, it's time to look for buys. So I said, all right, there's a 15-minute institutional candle right here. Now, someone might say, why didn't you go down to the 5-minute? Well, and refine it down to here. The reason I didn't do that is because this week in itself, it hasn't been too it hasn't been making too many deep retracements inside of institutional candles. Like lately, I've noticed price just taps into the open of it and then buys or sells off of it right away. So I'm trying to adapt to that right now. You have to adapt to the mentality, and because of that current situation, that made my stop loss to be 70 pips. But at the end of the day, it's not about the pips really, it's about the percentage. So if you're using about 0.5% to 1% risk, 1% to 2% risk each trade, no matter what, even if you use a 100 pip stop loss, you're only going to lose 1%. That means you'll make less money, obviously, because you're lowering your loss size. But at the end of the day, the setup was a good setup, and I have to adapt to the current market conditions. So at this point, I said, all right, this is the institutional candle that swept liquidity. It broke structure. Overall trend is moving towards the upside. I also had my Fibonacci confluence with me as well. If you take the fib low to the high, you can see that it's in the discounted levels. The blue zone is the discounted levels. Once again, we swept liquidity, so that's about 5 confirmations right there by itself. So what I did is I set a limit, like I told everyone to, right over here at the open, with a stop loss just at the low, and then take profit would be the next high. Now I know this isn't clear. This is it's basically like a 2 to 1, almost 3 to 1. Like I said, this is a scalp, and with scalps, you get what you get. You can't expect to always make 50 to 1s, 100 to 1s. With a scalp, you're basically just scalping whatever the market's giving you. Now, this is a short-term target. If you wanted to target the 12H highs, which is our next level that we're looking to sell at, you can easily target there, and that would give you a better risk to reward, but I was not trying to hold it for that long. So we all know what ended up happening. And one more thing I want to go over. Before price even came to our POI, we created more liquidity over here. We created more equal lows here, and then a little bit more of equal lows right here. So it just shows you that before price comes near your POI, or before price taps into your POI, 9 out of 10 times the market's gonna create liquidity before tapping into it. The reason they do this is because, think about it, if you're a retail trader, which we all are, but if you're trading support resistance, you're going to be on the 1 minute time frame buying this, right? You're going to be breaking, retesting with this. You're going to be buying the breakout right over here. You're going to be looking to break and retest right here. You got to think in terms of what everyone else is doing to understand what smart money is doing. Like, really think about how there's billions of dollars that are being traded into the market every single day, and then just think about how there's money here because of break and retest traders, and then we also have resistance traders selling right over here, and then we have more long-term break and retest traders right here, and then we have support resistance traders right over here. So there's money and liquidity all over the market, and this is just on the 1 minute time frame. So that's how crazy it really is. And then down here you can see there's even more long-term support resistance traders holding. So if anyone's holding long-term positions from a support trade, like right over here, most likely gold is gonna have to come back down to that liquidity and take it before going up, because it's not gonna go up while every single retail trader is in the trade as well. So let's just quickly play this out. We all know what happens, but for the sake of the video, let's play this out. And as you can see, this was a crazy sniper entry. Price taps in pretty nicely to the pip of the zone. And by the way, if you accounted for spread, this wouldn't have been an issue. You always have to account for spread. So my spread for gold at the time was like 20. That means it's 2 pips. That means I had to move my entry 2 pips above. So this was like somewhere like this. I had to move it like somewhere like this right here, and that allowed me to not miss the trade. Yeah, I'll go over USDGF after I do this, but yeah, on the 1 minute. And as soon as price came in, now this is something I want to go over as well. Trade management. This is really important. This is extremely important. When you are in a trade, don't be scared to take partials. I was just talking to one of the students today, and they told me that, they ended up losing some money because they didn't take partials. For this USD JPY analysis that, we sent out right over here, we had two potential POIs. The first potential POI was right over here, and the second one was over here. We caught the buy from here to here, but guess what? The market ended up going back down to stop us out. Let that sink in. It stopped us out, but we still made money. Okay, so I'm actually about to do that right now. So when you are in a trade, so let me go over this right now. I made a video on this yesterday, but my mic was not working, and I just talked for like 50 minutes about this, but yeah, it's pretty annoying. But yeah, so let's say the market is bullish, right? But then you want to take a sell, because let's say you see this break of structure, price comes back up, and then you're in for the sell. Let's say we enter for the sell right now. Stop loss at the high, TP, the next macro low, whatever. The time you want to move your stop loss to break even is when the smaller time frame is breaking your mini micro structure. So on the higher time frames, if you're looking for a buy, what you're gonna see is this. You're never gonna see the smaller time frames like you're never gonna see the smaller time frames right away just sell off. You have to wait for both of them to be in line with each other. So if the higher time frame looks like this right now, but then the smaller time frame looks like this, it looks like that, then don't take the trade. Just don't take it. But after price taps into a potential POI, like for example right here, imagine this zone is a strong institutional candle towards the left, something like that. As soon as we tap into that zone, that's when you drop down to your 1 minute time frame and you look for those breaks of structures, and those breaks of structures allow price to continue going lower, to shift the market, shift the structure. A lot of people, this is the thing, people know what a POI is. It's a point of interest, but you don't understand the logical definition of it. The logical definition of a point of interest is to reverse price from going up and making it go down. This is a sell side example. If I have a sell side POI, this simply means that I'm waiting price to come into it, and I want that POI to cause price to go down. So from a logical perspective, all that's left is to go down to the 1 minute time frame and look for that obvious shift of market structure, that bearish structure to form. Now after you do get tapped in, let's say I enter the trade right now, right over here, stop loss at the high, and then TP just the next low right here. The best time you want to take partials is at the last higher low that led price into your potential POI. So for example, we have this low, we have a high, we have a higher low, and then we have a higher high. The last higher low is where you're taking partials. Let me just put this up right here, text partials. So the reason the last higher low is where you're going to be taking partials is one, because there's obvious sell stops resting below this. It's another type of liquidity. We all know this. And secondly, it's safe. If price is going to break past a previous higher low, remember, you're reversing, you're going for the sell. If price is breaking past a previous higher low, that's a good sign that the market is now going to continue going your way. But you don't want to get too comfortable, because once again, because there is sell stops resting below, the market can easily go like that and then reverse. So this is the reason we take partials at the last higher low. So for example, USD JPY, let me go over where I told everyone to take partials. I told everyone to take partials as soon as price breaks past this level right here. So let me go to the 1 minute. Okay, so I already have my bad. So on the 1 minute time frame, I think we are entered somewhere here, and I said as soon as price breaks 110.377, take partials. I remember specifically I said this because this is that last lower high that led price down into a POI, and then the market pushed up, breaking it. So that's when I said take partials, move your stop loss to break even. And that's what everyone did. They took partials, moved stops to break even. The market completely pushed up, hitting our take profits, and then yeah. Now the second one, which was this trade right here, which everyone did catch as well, we got triggered in. Same thing. Partial at the last lower high that led price into your area of interest. Right here, this is the last lower high that led price into my area of interest. So I'm going to be taking partials as soon as we break above it. So right here, price breaks above it, and I told everyone, alright, take partials, move your stop loss to break even. At this point, you're safe enough to just go to sleep, because one, you paid yourself, and two, even if you get stopped out, you're still profitable. And that's the beauty of risk management. We made money even though we lost. Just let that sink in. Everyone's talking about win rate, but reality, we're losing, but we're still winning at the end of the day, which is the funniest thing. And then obviously, after you move your stop to break even, it did come back down. Maybe you would have got stopped out by spread, not too sure, but evidently we did end up getting stopped out at break even, but it was still a profitable trade, which is which is something sick, really cool to think about, that you can make money even though you were wrong. And I think someone wanted me to go over Euro CHF, so I'm gonna quickly go over that. Let's go to the 4 hour. I don't really trade this pair, but let's see what I'm seeing. By the way, if anyone has any questions, let me know. Leave them in the comments below, and don't be shy. Ask anything you want. All right. So Euro CHF. Let's look at this. So from a daily perspective, this pair is moving pretty bullish. I'm not gonna lie. We have this clean break of structure right here, super clean. So this is what I want everyone to look at. Look at trend. Trend, lower lows, lower highs. As soon as we came down to this area right here, price just completely, utterly broke structure and pushed up. Completely. What pairs are you on your watch list at the moment? Okay, so this, I don't trade this. And okay, so these are the only pairs I'm watching for my, non-minor pairs. So AUD USD, USD CAD, USD JPY, and gold. And then for my GBP pairs, I'm not trading this. I look at GU, GJ, EU, and EJ. Now, just because I'm doing this doesn't mean you have to do this as well. Listen. So, you gotta make sure that the way you trade or the pairs you trade are built for you. I back tested these pairs for hours like a madman. Like, I used to stay up all night. Like, I didn't sleep. I stayed up all night just back testing these pairs. That's why I understand really good how GJ and all these pairs move. If you're new and you're not too comfortable right now, I recommend taking 3 pairs. Either one, London pair, one US pair, and one Asia pair. Or you can make it all London pairs, New York pairs, whatever, depends on you. But stick to 3 pairs and back test them. As soon as you're comfortable with those 3 pairs, stick to them, and then you can move on to the other ones. But for now, I only trade these pairs. I don't trade anything else. But let me go back to your CHF. Yeah, so we saw that clean break of structure on the daily time frame. Now, really at this point, all I would do is I'd look for that major move up that broke structure. So in this case, right here, we see that major move up. This was that major move up that broke structure. Now let's look at institutional market cycle. Right here, we have a major expansion move up. Right, we see this major bullish move up. Right after that bullish move up, we're followed by a manipulation. Let me make this do something. I was trading GU earlier, and I was in a buy on the charts. There was a major move up. Do you know why that was? Sure, I'll take a look at this later on. So so we saw that major move up right here. Manipulation, meaning this is where there's a bunch of liquidity being generated. Right here, for example, liquidity top. Right here, liquidity bottom. Some more liquidity over here, which is like you see how easy it is to spot out. Like, it's crazy. That liquidity again. So there's just liquidity inside of the zone. That's what the manipulation zone is, and this is one of the market cycles. And right after that major manipulation, we have another breakout. So my rule of thumb is I only enter on these blue zones, on those major big moves. So right here, at this point, what I would do is I'd look for an institutional candle inside of this range. So let me go down to maybe the 2nd daily time frame, maybe the 3 daily time frame, the 4, and there we go. On the 4 daily time frame, there's a pretty clean institutional candle. Now, once again, if you watch the order block video, you'll know that I don't have a specific checklist of which time frames I use. You just have to look over every single time frame until it makes sense to you. So on the 4 daily, this is the time frame that makes sense. And if you measure this, it's 35 pips. So if you are looking for a swing, then obviously you wouldn't really want to refine this. But yeah, so that's one potential POI. And a second potential POI would be at the low right over here. This daily for institutional candle. So price can either come to this one or this one. Now there is also a possibility. Now, I don't really like doing this, but there is a possibility the market can come towards this POI as well. And let me explain why. I know I'm contradicting myself because I said I don't enter on this, but let me explain why first. So one, this move down swept liquidity. That's one. So like I said, if an order block sweeps liquidity, it's a lot more stronger. Two, there's liquidity resting above it, meaning that usually price is going to be attracted to wherever the most liquidity is. Four, we broke structure from this major move. So we have 4 to 5 confirmations, let alone just for this one right here. So we have 1, 2, 3 POIs. You can risk 0.5%, 0.5%, 0.5%, or what I usually do is I look for confirmation on the first one. The first one closest to price, I look for confirmation. If I don't find the confirmation, I don't take the trade. Now the second one, I set limits, and the one below there, I set limits. Most likely, I'm really extremely confident that one of these 3 zones will play out. Definitely, in my opinion, definitely. I've seen this stuff happen a lot of the time, and they will play out. And one thing I want to go over is Euro USD, right? So let's go back to like the 5-minute time frame. So a perfect example. So after Euro USD tapped into our zone right here. Now I made a video on this on the course. Check the case study on Euro USD. Hi Track, would appreciate your review on Bitcoin's current chart. Oh yeah, thank you for reminding me. I'll do that. Also advice on how you would manage risk to stop loss since this pair is more volatile than gold, and would you also not look for confirmation from an order block pricing? Okay, yeah, I got you, bro. Look at that just now. Let me quickly overgo this. So we already went over this Euro USD pair. Check the course, but basically what I wanted to say is how important it really is to take partials. I told everyone, if the market breaks this level, and it kind of almost did, take partials and move your stop loss to break even. Most likely when you have multiple points of interest, you don't have to, not all of them need to be giving you those 80 to 200 pips, but they can give you a lot of nice movement towards the upside. So for example, this one gave me about 33 pips. Gave me a 33 to 40 pip move up, and now the market's reversing, right, to maybe come back to mitigate any ICs, or it could be going back down. My point is, when you have multiple points of interest, try to enter them, but don't try to enter them for the long-term move. Enter them towards the next high. So for example, if you to enter this, Euro USD trade, this would have been a super easy, quick 40 pip move up. Now, if you are looking for that major, swing move up, then this was not the move, and let me explain why. If we were looking for that swing, the market would have easily broken this high right here, and it failed to do that. It didn't really break past it. And the reason it needs to break this for it to be a big move is because this is that last lower high. This means that the market, this smart money, is holding sells. They're holding sells at this high. If they didn't want to break above this high right here, that means they're holding sells to continue on selling down because they have other points of interest they're worried about that they want to go down to. So that could mean that the price action is getting ready to come back to test maybe this point of interest right here, or maybe this point of interest right here. Now that's basically for Euro. We're done with that. But yeah, let me go over Bitcoin. So someone actually did show me or tell me that the Bitcoin daily chart is similar to how gold moves, and I've never really looked into that before, so let's compare this right now. I'm not sure why it's not. Okay, there we go. So as we can see, whenever gold is moving bullish, it looks like Bitcoin falls, and as soon as gold started falling and consolidating, Bitcoin also started consolidating. So it basically has an opposite correlation somewhat. So sorry, I completely said that wrong. When gold is moving bullish, it looks like Bitcoin also moves bullish, but the second gold started falling right here, Bitcoin also started falling, and then we also had that major consolidation, and on the daily time frame for gold, we're also kind of consolidating right now. You can see overall we're kind of in a consolidative structure. Nah, I don't use divergence. I've seen a couple traders use it, but I don't really find the use in it. It's a little too complicated for me, so I don't really use it. But now with Bitcoin, it does have a positive correlation with gold. They both kind of correlate with each other. When Bitcoin goes up, gold goes up. When gold goes down, Bitcoin goes down, which is pretty interesting. I never assumed an indice like that to correlate with a cryptocurrency, which is interesting and something I'm gonna have to look into. Now, the second thing, when you said how do you use proper risk with Bitcoin, now honestly, I have to look into this myself because I don't trade Bitcoin. I don't trade Bitcoin. I don't trade crypto in general. I don't like to trade crypto. I like to invest in crypto long term. But let me go down to like maybe the 5-minute time frame and try to figure something out. So let's say you were trying to sell right over here, and this is your entry, and then your stop loss would be the high. See, this is the thing. I know with gold, you're supposed to subtract one number from the left or from the right. With Bitcoin, I'm not sure how it works. I'm not sure if you subtract the number from the right or this is how it is. But I'm sure there's online calculators that you can type in. I know there's one specific one. I can't remember it right now, but I'll link the link as soon as I end the Zoom call. I'll send the link to it to the group chat. But yeah, I'm not too sure, but I would assume that your zone is not 24,461 pips. I would not assume it's that. It's definitely something different. But I'll send the link for that, and if anyone knows, by the way, let me know in the chat because it'd be a good learning experience for me as well. Well, yeah, that's basically all I really wanted to go over. I went over how to manage your trade and everything. If you guys have any questions, just let me know now, and I'll go over some stuff. If you guys have any questions at all, like any confusion, anything you want me to go over, any pairs in itself, just let me know. Oh, someone wanted to check GU as well. Let me go over that quick time. Alright, so you said that why did GU go up from here? Alright, let me open a brand new GU chart. So you can see on the daily time frame there was an institutional candle. Oh, what pairs? Alright, I'll get into that. So on the daily time frame there's an institutional candle right here that kinda got tapped into right here. We saw that there's this last down candle before that move up that broke structure towards the left, and that's why GU fell into this point of interest, because this is where smart money added buy positions, so they pushed price down into here to close the sells. And then on the 4-hour time frame we saw that GU just made a crazy move towards the upside. Now I was not expecting that to happen. I wanted price to come down into like this point of interest right here, but like I said, GU, most of the pairs that we're looking at nowadays, those institutional candles are not getting tapped into crazily. They super minorly, they get tapped into and they move away right away. They don't make deep retracements, and refinements more or less lead to missing trades. So either way, I'm still waiting for GU to come back down here. I still have a strong feeling that GU will come back down at one of these two levels, so I'm still waiting. But overall, yeah, GU did move towards the upside because of that daily IC. When you're scalping, are you necessarily looking for moves in a higher time frame zone? Nah. So you could do that. That's something you could do, but usually I don't do that. Like, usually I'll show you exactly how you can scalp on the 1-minute time frame. Like, it's super simple. Let's go somewhere like random, like right over here. So let's say you're looking at the charts, and you want to look for buy opportunity or something. Damn, yeah, no, that happens, bro. It's annoying. Stuff like that happens a lot. It's really annoying. But yeah, so basically with UJ, when you're scalping, all it really is, you just want to look for a break of structure. So for example, like right here, we see that UJ overall is kind of moving towards the upside really slowly, and we did see that break of structure right here. Now when we do see that break of structure right here, and we know that after a strong BOS, price tends to retrace into the open of that break of structure and then continue down, right? So we know that UJ has to go up now. We already know that. Now we also saw that there was this little smaller time frame, bearish structure forming, but then the market ends up pushing up. We end up breaking a ton of structure right here. BOS towards the upside. Now at this point, literally just look for an institutional. Oh my god, I'm on the 1 hour time frame. My bad, guys. My bad. I was on the 1 hour. I'm all over the place right now. But yeah, let's go like right here. This is a good example. So right here. So basically, UJ, we created some liquidity over here, right? You see that liquidity? Price breaks down, sweeps the liquidity, goes up and gives you a COS. At this point, just highlight that major move up that gave you that continuation of structure. Look for the institutional candle that was the cause of that, biggest move up, and wait for price to come back into this level. And that's what ended up happening right here. Now, literally with when you're looking to scalp, it's just breaks of structures. Like right here, you see this high, higher low, higher high. As soon as you get that break of structure, look for price to retrace back into that last IC. In this case, you may have gotten stopped out. Yeah, you probably would have got stopped out. I'm not. If you accounted for spread, maybe not, but most likely you would have. But you can see how it comes into that IC and then sells off. Literally, scalping is really simple. It's kind of just about waiting for those clean break structures. Like right here, this would have been a clean one. Big move down, break structure right here. Price traces back into that IC right here, sells off, and you would just target either this low or this low right here, and then the market continues going up. And this is actually how I caught this trade. I saw this major move up right here. After that major move, we followed by a manipulation zone. Price took liquidity and then pushed up once again, giving us a continuation of structure. And then I simply just waited for price to come back into that level and targeted the next high. And yeah, thanks one more. Alright, let me go over this one quick time. Oh yeah, I saw this. So with GU, this is the 60, right? Alright, let me go over this on my chart. Make this a little nicer. So overall, that's a pretty good analysis. It makes sense. Just go on the 1 hour time frame. Yeah, so it's the same thing I'm looking for. Same exact thing I'm waiting for. I'm waiting for price to come back down at this one as well. It has to, in my opinion, it has to come back down here. Specifically because like that daily IC, it was a bit, it was a clean daily IC, but there also is another 4 hour a 1 hour institutional candle that needs to get mitigated. So it can't just leave this institutional candle and just go up. Most likely I feel like it's gonna come back down over here, and if it does not respect this one, most likely it's gonna target the liquidity, which is down here, and come down to this 4 hour institutional candle right here. Yeah, it's 1 hour. Yeah, it's the volume. I don't really use that, but I have something cooking up. I've just been back testing it. So as soon as I'm done back testing it, I'll let everyone know about the volume indicator. But yeah, that's good. This one's a really good one as well. Clean IC. But yeah, that's basically all I'm looking at. GJ. Oh yeah, GJ was a clean, stressful trade. I had anxiety when I was holding this, but basically, we got short triggered in right here, and stop loss was at the high. Now, sorry, stop loss was at the high, and then boom, it missed it by like 1 pip, not even like, missed it by 0.5 pips. Like that's insane. And then ended up selling off right down here. At this point, I told everyone to take some partials and move stop loss to break even, but GJ, I see it coming back down all the way down to here. If not, long term I see it coming here, and if the market does decide to reverse, then there's no problem. We'll just take the sell from here. And I already went over this on the case study, so take a look at that. Does it show the buy pressure / sell pressure? It just shows where the most amount of positions are, where the most orders are gathered. From my own research, that's what I've acquired. So if, for example, if I take the indicator right here, I go to volume profile, and I get fixed range or whatever, and I run it from this low up to this high, all it'll tell me is where the most orders are gathered right now. So for example, this would be the most volatile zone. Yeah, right here there's equal lows right here. I'm expecting it taken out as well. Yeah guys, anyone have any questions, anything I'm gonna go over? Because I'm gonna end this soon. I have 5 more minutes before Zoom ends this. UCAD, nah. So I don't really try to scalp UCAD. It's more of a swing pair. But the reason I didn't take this, like I said, oh shit. Damn man, how long is that? 34?